This is episode 7 of How to Trade with Less Than $5,000, presented by myself, Rony Nehme, Chief Market Analyst at Squared Financial. Welcome back, everyone. And please let me know if anyone is here, if you can hear me well, if everything's okay, the image and all. Before we start, okay, so everything seems good. I'll start sharing my PowerPoint, but before I do, I just want to tell you that if you have any questions, please type them here in the chat and I'll answer them at the end if I can. This episode is about trading psychology, very important subject. Okay, guys, so I made some changes to the episode. I removed a few things. I'll show you now. Let's start the slides. Okay, so I made some changes because I think trading psychology is an extremely important subject, and I'd like to concentrate on it more or give you more knowledge about this subject. Okay, so I'll share my screen right away. Okay, so as you can see here, the changes I made, because I think psychology is extremely important. I've been thinking about it and trying to put them all together, all these topics together. And to tell you the truth, I gave a course about trading when I ran my education program, and it's a course that took 11 to 12 weeks, and 1 week was specifically dedicated to psychology because I think it's an important thing to know for every single trader, okay? Because trading is all about having the proper mindset. And so I removed the interpreting candlesticks and the hourly and 4 hours chart, and I will add them on the next episode, episode 8, next Wednesday, all right? And I will speak more about trading with the right mindset and what it really takes to become a successful trader. Okay, so let's start straight away. Okay, so developing the mindset of a master trader. Okay, this is extremely important because you could have the best strategy, the best indicators, have the best financial knowledge and not make money trading because you don't have the proper mindset. So mindset is what differentiates the $1 million traders, what we call them, and another average, let's say, trader. Okay, we saw in our previous episodes that, and you heard me say this a lot of times before, consistency is the key. You need to find consistency. It doesn't matter if you have ups and down days, as long as you find consistency, and then you can manage your winning better and cut your losses more efficiently. Okay, so that's what differentiates a good trader from a bad trader: consistency. However, you can find consistency and have a good strategy and yet not make a lot of money. Why? It's because you don't have the right comfort zone. You're not in your comfort zone, and you're stressing too much, and you don't have the right mindset. So let's start. What it really takes. First of all, don't risk money you can't afford to lose. Okay, so don't trade your rent money if you want, or your food money. Okay, trade with investment money, because we all have savings, right? We all have money put aside, or maybe an income, an annual income that from a salary, from a job. Okay, but if you trade with money that you need for basic necessities, the stress will be overwhelming. So you need to trade with money that you set aside for, let's say, buying a new phone or buying a new car or going on vacation. And then the stress is much less overwhelming than if you're trading with money that you cannot afford to lose. For example, I'll give you an example. I have many clients, and one of them recently came to me and she said, I'd like to open an account. This is the only savings I've got. I lost my job recently because of COVID-19, and I want to start trading with this money. And she assured me that this was the only savings that she had put aside, for days like that, and that please help me not to lose that money. And there's nothing I can do with that? And I, of course, told her, no, please find a job, get a streaming income back again, and then put that money to work in the market, because the stress is overwhelming. And no matter how I coach her or how I help her, the stress is just going to, make her not achieve her goals. Okay, so know your comfort zone. Let's talk about the comfort zone again. Stress has to do a lot with your comfort zone, and if you can reach a certain comfort zone, first of all, you have to know what your comfort zone is, because every person has a different stress limit or has a different barrier, and be above that, the stress is just too much to take, and that's why there's a lot of people who can take stress much more than others. Same issue that I have, maybe I can't handle it the way another person will handle it. The other person might be able to handle it with calm, with without really a lot stressing too much. What is stress? We all know that stress is a hormone called cortisol that is released into your bloodstream when there is an overwhelming situation. It's called the stress hormone. Okay, so cortisol, it increases your blood pressure. It increases your heart rate. It gets your palms sweaty, your hands sweaty. Okay, and your glands also release another hormone called prolactin, which is the growth hormone. Okay, it's called also the growth hormone. That's why there's a lot of people that are 20-year-old and look like 40 because they stress too much. The singlest issue, they can't handle it, and they will go overboard in order to, it's like the end of the world for them. Whereas another person that might be 40 but will look like 20 because they take it very, smoothly. They're very calm about it, and this is called comfort zone. So each person has a different comfort zone level, and it is very important to know what your comfort zone is before you put any money to work. You'd have to know what your comfort zone is, but don't allow it to define your limits. I added that to the PowerPoint. Don't allow this comfort zone to define your limits. And I'll give you another example. When I started trading back 20 years ago, almost 20 years ago, I had found consistency during my early stages. Few months into trading, I found a strategy, and finally I was, getting positive days. I was happy. I was very, motivated by this, and wow, now I'm very self-confident that I can do this. Okay, so I started trading. I was prop trading, of course. So just like I said, I started trading in 2001 for a mutual fund company. So I was trading the company funds. And the way it works is you have a risk, and then you have the capital that goes along with your risk. And depending on your performance, your risk will go up along with your buying power. So let's say, for example, I start with $50,000, and then I have a certain risk. And then if you prove that you have the consistency, and it's an algorithm that will calculate this risk for you, and it moves up and down depending on performance, as I said. And if you do good, your buying power will go up, and if you don't, your buying power will be reduced along with your risk level. And of course, as the buying power is up, let's say it was $50,000, I was trading, let's say, a quarter lot, okay, 0.25, and now I have more buying power, so I can trade half a lot, okay, and then so on and so forth. And then it keeps increasing while your performance is increasing. So let's say your making was $50,000, I don't know, $1,000 a month on average consistently. And then the next month you do that as well. And then maybe the third month they will increase your buying power along with your risk. So now I have $100,000. So logically, I'm supposed to be making $2,000 a month now because I have doubled the buying power and doubled the risk, etc. So on and so forth until I reached 2 lots. Okay, default trade. So I put a buying and a selling button with a default 2 lots per position, or in stocks, it was, I think, 3,000 shares back then. So depending on which class, asset class I was trading. So the story is that above 2 lots, even though they increased my buying power and my risk, as soon as I would go above 2 lots, let's say I would trade 3 lots, it would be overwhelming. The stress was, I wouldn't know what I was doing anymore, and I wasn't making money anymore. I had 3 lots. Oh my God, this was too much for me to handle. My palms, my hands were sweaty. I didn't think straight. The screen was, getting blurry. And I assure you, I didn't know what back then. I didn't know what is happening. Why am I not making money anymore? And of course, because I was losing, I had more losing days now, my risk was reduced again. And so I had to go back down to 2 lots, and magically I started making money again. And so my manager came to me back then and said, this is your comfort zone. You're not capable of, usually the comfort zone is money, right? So I'm handling, let's say, $100,000. Another person can trade with $1 million and have the stress level, or 10 million or $1 billion. Okay. And for me, it wasn't about money. For me, it was about a disposition. As soon as I would go above 2 lots, for some reason, I wouldn't be able to handle it. So then my manager was coaching me into trying to, little by little, baby steps, trying to raise that comfort zone and giving me the self-confidence to be able to trade maybe 2.5 lots, or maybe 2 lots. And if the position is going good for me, maybe I will add to this position. Of course, I was stressing, but with time and with his coaching, I was capable of raising that bar for myself. Okay. And another person, let's say, I'm giving you another example. A person would trade 2 lots as if it's nothing for them. Okay. And I've seen this before as well with my own students. Some traders in the same group were very comfortable trading a lot of shares or a lot of big position, a lot of lots, whereas other people were trading with, very small increments and couldn't reach a higher level because of their stress level. And I had to coach and work with each person separately depending on their comfort zone. So this is just to explain to you what your comfort zone is, but don't allow it to define your limits. And we're here to, once we know what your comfort zone is, and I'll explain it to you how we can define it. I know we're only doing webinars and trying to get you to open accounts with us in order for us to help you later on. And I'll give you ideas that I have, that I've been thinking of along with my team. All right, so the third thing that it takes to become a really good trader is building good habits. Okay, so building good habits. All master traders have this in common: is they are calm, they manage stress very well, obviously, and they are what I call growth. They have the growth mindset as opposed to a fixed mindset. A fixed mindset is someone that knows it all. It's someone that when you approach them to teach or to tell them something, a feedback, anything, they'll go, yeah, I know, I know what I'm doing. What I'm doing. They will block you as soon as you approach them for advice, okay, because they know it all. This is a fixed mindset. Whereas the master traders, and they all have this in common, is they have a growth mindset. They're always open for new learning, for feedback, for criticism, for comments, for compliments, for letting them know what their bad habits are. So because, and that's one of the reasons I like trading in a group, is because when you're trading in a group, you're sitting next to this guy and you start knowing them just like your own family, because you're every day you're sitting next to them and you start getting to know their good habits and as well as their bad habits. And bad habits are extremely, extremely hard to get rid of. There's a book I read once called The Power of Habit, and I learned that every bad, good, or insignificant habit starts with a psychological pattern called a habit loop. Okay, and once we've formed habit, they are so hard to break. Why? Because many times we forget that we're doing them. We don't know that these are bad things to do. We forget about them. We build them along the way. We're not born with them. We create them, as we go along in our lives. But most of the time, many times, we don't know that we're doing them, and so we forget, unless someone, a friend or a family or a co-worker next to us, points it out to us and tell us, why are you reacting this way? And then it will wake you up, because you will know, how am I reacting? And he says, you're angry, your face is red, let's say. I'm giving you an example. Your face is red, what's going on? And a fixed mindset would tell you, no, I know what I'm doing, leave me alone. Whereas a growth mindset would take it like a sponge, would take this knowledge like a sponge and try to build on it and get rid of the bad habits with time. Okay, so very important. That's one of the reasons I like I said, trading in groups. Also, bad habits are the things, the obstacle that gets us to move forward from a comfort zone level higher. If we have a fixed mindset, it would be very hard, and I've seen this as well before. And some people are, block you whenever you're trying to teach them or to make them see that this is a bad habit that you're doing. Go do something else. You're stressed. No, I'm not stressed. Yes, you are. Some people handle stress differently, and some people don't know how to handle stress at all. You have to find your stress level, yes, but then you have to find how to manage this stress. Some people go for physical activities, I don't know, swimming, boxing, yoga. A lot of people just shut down their screen and walk away. This is very important as well. We're going to see this in the next slide. Okay, walking away. I used to know also a trader, a very good trader actually, who started in my group. So in February 2001, we were in the same group, yet he managed to get quicker, much faster than the rest of us, and become consistently profitable. And this guy was so calm, was so handled stress very well. You never knew he had a poker face. You never knew if he was having a bad day or a good day. And so it was the same reaction. If he was having a good day, fine. If he was having a bad day, that's as well the same thing. He never showed emotions. He never showed happiness or sadness, unlike the rest of us. I, for example, handled stress very differently. I was very angry whenever I had a bad day, and was very happy and ecstatic and singing sometimes when I was having a good day. And this guy, one time he was trading, and an hour later he just left. He closed his computer and walked away. And we all thought, oh, he must have had a bad day. But we had this monitor. It was a very competitive environment, and we had this monitor that would show the top 10 in the trading room. Okay, the top 10 traders that day, how the profits that they had, and he was number one, even though he walked away after an hour. And this guy, even though he had a very good day, me, for example, I would build up on the good day. I would, wow, I want to make more money now. I'm up so much. But for him, he knew that this is his objective. He reached it, and now it's time to walk away. And you can, in this line of work, you can walk away anytime you want. You can just work an hour and leave. Not a lot of people do it, but I admire the people who are able to just shut down the screen if they're not doing good, or even if they are doing good. Okay, so I'm telling you all this because it's true, and I've seen it so many times. I've trained so many types of traders, and I've traded along so many types of traders, and I think I know, or maybe I don't know all of the types of traders, but I think I know enough to know and to be able to detect what kind of trader this person is going to become. And this is why I started to run an education program, is because I developed this skill with time and experience. And I'm telling you this because hopefully by sharing this knowledge, I'll get you to think about these important things as well before you risk any money. And you don't need to learn the hard way like most traders do. Like, of course, you're going to have bad days, and of course, you're going to have losing negative days or negative months. But if you know how to handle that stress, it won't be overwhelming to you anymore, and you will not feel what I call learned helplessness. And this is the fear of making mistakes. It's like a dog. It's like a dog, beaten dog, like cruelty, abused. The dog is crushed. The dog has been maybe trained the wrong way and beaten because they were doing certain things, and this is the wrong way of doing it, because at the end the dog will just be so afraid to be in the same room with you and will always, put their tail down, their ears down, be scared of you. And the problem with this frightened dog, I'm giving you this example because this beaten animal is so scared, high anxiety, constantly worried, scared because it learned that it cannot escape a frightening situation. And so these dogs will always have trouble learning new skills. So if you want to teach them new skills, they'll have trouble learning. And this is something that I've also seen, unfortunately, in trading. A lot of people train with us for 3 months, 4 months, 5 months, and then they get so beaten up all day and they can't get up from it, because they develop this fear of making mistakes, and then it just crushes them and they give up. Even though I noticed that many have very good strategies, even better than mine, and trade very good, but they just can't handle the bad days. They just can't walk away. They just can't turn the page. Maybe they go home and feel crushed, and they take it with them home. And I know a person as well. I like to tell stories. I'm sorry, maybe it's taking too much of your time, but I like to tell stories like that because I experienced this. I know a person, a trader also, who started young. He was a kid. He was like in early 20s, and when he started with us, he was very calm. Okay, this kid had also a poker face. You can never know if he's doing good or bad. Very polite kid, very calm, polite. How are you, sir, etc. Please don't call me sir. My name's Ronnie. He didn't want to. He was always extremely polite. But apparently he wasn't handled trading. He wasn't able to handle bad days very well. And you could see it. He would be frozen like this in front of his screen, very mad. But that's it. He was too polite to say something about it. And just one day, out of the blue, he had a bad day. Even though this kid had good strategies, he had more good days than bad days. But this one bad day, a week, let's say, he couldn't handle. And this one day, he just screamed. The room was quiet. Everybody was calm. The market wasn't moving that much. But obviously, he had the wrong position in the wrong instrument. And he just screamed, but he didn't say a swear word. He said, fudge. He just screamed that word because he couldn't say the bad word because he was so polite. And then he became very red, started screaming, what is going on with this guy? And I advised him to, shut the screen down. Maybe we can talk tomorrow, calm down. If you want to go home, he left and he went home. The next day, his mom comes to the office because she couldn't understand what was wrong with her kid. Why did he come home like this? And he didn't sleep all night. And what is wrong? What are you guys making him do? What is that job? What does he do? And she just looked at the room and saw everybody was calm, sitting behind computer desks, and she didn't understand what was wrong with her kids. Okay, just to make a point that when you're crushed like that, when you cannot handle fear of making mistakes, that's also a psychological mindset that I'd like you to think about and try to get rid of, and I help you get rid of. So top 3 things that can crush fear. 1, learn to walk away. As I said, confidence comes from having a winning strategy, which allows you to overcome losses. When you have a winning strategy, it doesn't matter. You have a winning strategy. So you're going to have bad days. We all have bad days. But and you're confident enough that it doesn't matter. This is part of the business. The next day is going to be better, or the next week, or the next, depending what kind of trades you're in, and etc. So learn to walk away. Second, everyone who trades loses, accept that, but you must have a winning strategy so you win more than you lose, and eventually you end up making money, okay? Third, learn to focus on your strategy, refine it as you go, trade without fear. Easier said than done, I know. There's nothing I can really, you've heard me say this multiple times before, there is no magic formula, right? There's no magic formula. So I can't tell you how to trade. I can't give you a magic formula. It doesn't exist. Okay, if somebody's selling you a book for $197 or a webinar for $1,000 or whatever, and teaching you the secrets of successful trading, this guy or girl is probably trying to make money out of the $197 or $1,000 webinar. So there is no magic formula. Trust me. It's all about the right psychological mindset and accepting that this game or this job has bad days. It's part of our job, right? If you're a doctor, you're going to have bad days. Some operations you're not going to perform as well as some others. You're going to be very happy when you save someone. You're going to be very sad when you're not able to. Okay, so every job in the world has bad and good days, and depending on what your comfort zone is, you'll be allowed to be a better doctor than another doctor, or a better trader than another trader, or better whatever it is that you do better than others. So you have to know your own stress barriers, but you have to do it on your own. You have to walk through that door on your own. Okay, so like this, the Matrix movie. I can only show you the door. You're the one who has to walk through it. This is a Matrix movie, actually. It's a line that I love from that movie. Anyway, so learn to focus on your strategy, refine it as you go, trade without fear, and build your wealth. Build your wealth. Very important. We all know what building means. Building is not doing a bridge in 10 days, but taking your time to build that bridge, okay? So that the foundations are right, everything is correct, you're using the right material, baby steps, and then you achieve your goal, even if it takes time. Some people, as I said, the person in my group that achieved his goals much faster than the rest of the group, it doesn't matter. I had my own pace. At the end, I ended up making it. It took me, 6 months, maybe 4 months to become profitable, to actually reach a certain consistency, and then 6 months to reach my comfort zone, the story that I told you. And then I had to rely on my coach or my manager to walk me through the other steps. Okay. But this guy, the first month, he was already profitable. So it depends what, and again, it has nothing to do with strategy or trading. It just has to do with the right mindset. We were trading the same instruments back then. We were probably doing the same thing. But I'll give you an example. I would let's say, go short a certain instrument. Let's say I would go short gold, and he would be short at the same time. And then I would get out, and he would go long when I get out. So he would flip that position, and now he's long, because by getting out of a short, it means that the instrument is going to go up, right? So he would profit from both swings, whereas I was just satisfied from my day. And this has nothing to do with strategy, because we obviously have the same strategy, but it has to do with mindset. He was so calm, he was so confident that he can do more, and he wasn't letting his emotions get on top of him. I was so happy when I had a good trade that it took me a while to calm back down, or I was so sad when I had a bad trade, and it took me a while also to relieve the stress and get rid of the cortisol. Okay, so learn to build your wealth is very important. Okay, and I want to show you something. Okay, an investment calculator. I lived in Canada for 20 years, and what they have there is a tax incentive for people who invest their money. They want you to save money and to place that money in the market. Okay, so they built something called an RRSP, Retirement Savings Fund. And this RRSP, all countries have it. The US have their 401k. Other countries also have retirement fund. The reason they do this retirement funds is they want you to invest, to save money into a retirement fund in order to have money for eventually when you grow, when you're at your retirement age. Why? Is because if you save enough, and eventually when you reach, when you retire at 60, let's say you reach a certain amount of money, let's say you have $2 million in your bank account, then they wouldn't need to pay you your old age pension fund, right? So you save the government money. So in order to incite everyone to save money, what they do is the following. Okay, let's say I have a $50,000 annual income. $50,000 per annum, my tax bracket, as an example, is 30%. So I have to pay the government $15,000 in taxes. Why I'm showing you this, it has nothing to do with psychology, but it has to do with your mindset, because I want you to see things from a bigger perspective, okay? I want you to see, I've been telling you how hard it is and how almost impossible it is to find consistency, to find the right mindset, but now I want to tell you how easy it is to actually make money trading, in order for you to see that it's not as, it's not as hard to fix your mindset if you have a problem with emotions, to handle stress, because look how easy it is. Okay, so let's go back to our example. 50,000 tax bracket, 30% equals 15,000 that you have to pay the government. But then the government tells you, if you put $10,000 into this RRSP, this retirement fund, it's income tax deductible, meaning your $50,000, if you take 10,000 out of it, so you spend $40,000 out of it for your rent, your food, whatever, but you save 10,000, you don't spend it, and you put it in an investment account. What happens is now they will consider your income as being 40,000 and not 50,000, and your tax bracket just dropped to 20%, so you owe the government only $8,000. Okay, so this is an incentive. You're going to pay that 15,000 anyway. So instead of paying us the 15,000, me, the government, instead of giving me that money, take some of this money, 10,000, put it in your RSP, an investment account that you trade with it. You can self-direct it, by the way. You don't have to give it to a financial planner, but usually most people give it to financial planners. I'll explain to you why later on. They have jobs, they want peace of mind, they don't want to worry about what's happening to their money. But it's a savings account or an investment account that is there. Had the government not told you that I will give you a income tax deduction on it, you wouldn't have done it, right? You would just, work, take money, spend, etc. But now, you're saying, beep. I have to pay 15,000 to the government. Okay, no, I don't want to pay 15,000. I will put 10,000 in a retirement fund and only pay 8,000. Well, actually, you paid 18,000 total, right? Instead of 15,000. So 3,000 total. You just put 10,000 in an investment account, but that's yours. It's yours to build your wealth. And the reason they do this is because of something called compounded interest. Is because if you start young enough, let's say you start working in your 30s, okay, you graduate from school, takes time to find jobs. Let's say, for the sake of argument, you start working only or making real money in your 30s. We all started working previous to our 30s, but the money that we were making was definitely not 50,000. My first salary was not even half 50,000 annually. Okay, so my first job, and that's also has to do with comfort zone, by the way, because when I got my first paycheck, even though it was not enough back then, when I graduated in 1999, I found my first job in 1999 at a bank. And when I got my first paycheck, I was so happy. Wow, look at this money. I don't have to rely on my parents anymore. I can do things on my own. I can spend, I can buy stuff that I want. But when I look back at it now, this check or this first paycheck is nothing compared to what my comfort zone is now. Right, so this is what I would spend maybe on on a concert ticket or something. So it's not. You have to put things in perspective, and it doesn't matter if you have a lot of money or not. That's why these series of webinars called "Trade with Less than 5,000" or even "Trade with Less than 1,000." It doesn't matter as long as you build consistency and find, your way. And I'll show you something else. Okay. This is, I don't know if I can click on that link and go on the internet. Let's try, or I'll just share my other screen. How do I do this? Okay, enable screen sharing, and I will share that application window. Where is it? Chrome tab, compound interest share. Okay, so this is the website. All right, so it's the Canadian Securities Commission, because every financial planner works with something like that. At any bank, you go to the bank, you go to a financial planner, you tell them, I want to retire at this age. What can I do to save money? So of course, some countries have high interest rates savings account, but what's a high interest rate? 3-4%. If it's more than that, then obviously the bank is fishy or something wrong, because usually when you put money in a bank to work for you, the interest rate is not going to be more than 3%. Okay, so you go to a financial planner and you find a better way to invest your money. Most of the times it's in stocks, FX, commodities, bonds, real estate funds, REITs, what we call REITs, REITs, etc., depending on your age and depending on your risk profile. Okay, so they study all this and they tell you this is a strategy that we're going to give you. So let's go with $10,000. Okay, you just saved $10,000 your first year, and they always tell you to add, to every time you get a paycheck or a salary, take, but let's say I'm not able to do that because I like to spend a lot of money, so I'll just add $50 every week to this investment fund or this RSP, this retirement fund. At a 3% interest rate? No, let's go with 12%. Why 12%? Because the S&P 500, if we look at the S&P 500, which is the benchmark that we are supposed to look at when we, invest money in the markets. S&P 500 from the 1980s till today, so 40 years, has an average of about 12%. So if you don't want to worry about, you don't want to think about the market, you just put your money to work in the S&P 500 index. You buy the 500 best companies in the world, you collect the dividends and the capital gain. On average, you will make 12%, including dividends, right? So this is something that you can Google and see for yourself. So if you don't want to go to a financial planner, you just open an account, buy the index. Okay, so the fund manager obviously is going to try to convince you to open an account with them or the financial planner, because he will beat the 12% benchmark. So I can give you 13%, and if they do, then it will justify their management fee, their performance fee, etc. So the fees that you're giving them to make your money work for you. So the interest is compounded monthly, the interest rate, and 30 years. Let's say you start at 30 and you plan to retire at 60. So 30 years to grow. So your $10,000 become $1,119,645. So above $1 million. I just want you to see how compounded interest work, and I want you to think about that and see how not easy. I don't want to say easy, because then you will say, you just said there's no magic formula. There is no magic formula. But if you just put it in your mindset that you can baby steps work on your wealth, your account, by opening an account, putting, try with maybe $500 at first, $1,000, just to see if you can do this, right? The 12%. And what is 12%? 12%, 50. Let's take a calculator. 12%. Let's say I don't know, $10,000. Let's say you want to work, you want to trade maybe. There's 365 days in the year. Remove the weekends, so that's 52 weeks times 2, so that's minus 104. So you're left with 261 days. Let's remove the holidays. Let's say there's 30 holidays, so that's 231 days. Let's say you want to take 2 months off. Okay, 2 months off is minus 60 days, so that's minus 60 days. That's 170 days. Okay, you have 170 days trading days annually. Okay, and all you have to make is 12% on how much? $10,000. What is 12%? That's $1,200 only. So $1,200, $1,200 divided by 170 days equals $7 a day. So all you have to do is, in order to reach if you have 10,000 and you want to reach only the 12% interest rate, all you have to do is $7 a day. And this is what I teach my students, what I want my students to see, because everybody comes from the first day when they want to make money. They have, let's say I give them $50,000, they want to make 10,000 the first month. Impossible. Okay, you have to think of it in baby steps and in terms of risk management, how much you can make in order not to blow your account. I don't want you to lose that $10,000 or that $500, whatever. Do the same calculation with $500. Okay, let's put more than 12%. Let's start again with $10,000, 50 regular addition. I can't put 0 here because it won't accept it. So 50, let's say this is the minimum. Okay, so you have 10,000, 50, but you're trading very good. You have a good strategy. You're holding on to your gains much better, and you're improving your strategy. And now you're able to do 25% annual return. Okay, in 30 years, look at the $1 million. Look at how much it is now. 34,275,000. This is the total value of your investment, of your $10,000 investment. You're making only 25%. What is 25%? That's $2,500 annually, and that's divided again by 170 days. That's $14. So double. That's $14.70 per day. So try to do this with a demo account. Okay, let's go back to this screen. Try to do this with a demo account first, but don't trade too much with a demo account. Why? Because the demo account, the psychology is not, the emotions are not there. You will not feel all the things I want you to feel in order to improve and in order for us to be able to coach you. And what we'll do is, whenever you're ready, after your demo account, start with a real account, maybe $500. Okay, start with that money and try to make, what is $500? Do the calculation. Say to yourself, I want to do 25% annually. You just want to see if you're able to do it, right? I'm not telling you $500 is going to become 1 million. I just want you to try to make the same consistent average on a daily or on a monthly basis with that amount of money to prove to yourself that you can do it. And then you will have the self-confidence to adjust or to make, add on to your investments. Okay, so try with $500. What we'll do is, eventually, whoever is going to open their own account, my team and I, and we have one of our traders. He's here with us in the room. His name is Karim. So, and we have another person also who would be able to help you. What we'll do is we'll open a Telegram channel for all the new traders, new beginners that open an account with us, with SquaredFinancial. And we will be coaching you. First of all, when you open a demo account or a real account, live account, and you fund it with $500 or whatever money you have, 100, 200. This exercise is just for you to be able to see if you have what it takes to become a master trader. The money is not important. Don't think about money. Don't think about, I want to make, a huge income, $1 million the first year. Think about the consistency and the percentages that we just spoke about. I just showed you, and baby steps for you to prove to yourself and to us that you have what it takes and you can build on this consistency. And so what we'll do is, when you open the live account, fund it, you get an email with of course, all that. If you have ever opened an account, you get an email with a password for yourself to trade and a read-only password or an investor password. Okay, send us this investor password to me and my team. We'll open a Telegram channel. We'll monitor your trading, and then we'll be able to chat with you on the Telegram channel or WhatsApp channel, whatever. We'll be able to chat with you. We'll set up a group, maybe for the first 20 people who open an account. We'll set up a group, and myself, Karim, and Aso, the third person that is also analyzing these instruments for you on a daily basis and is a trader as well, will coach you into, fixing the mistakes, getting you in the right mindset, seeing what skills you have. We will let you trade on your own. Of course, we will, even Karim has his own. We're thinking of, this is also another idea, is that we will have some live trading for beginner traders, whereas Karim will do the trading and you guys can just understand. He'll explain along the way, of course, while he's live trading. And you will see the screen, you will see the trades, the live trades, and you will be able to understand what his thinking is or what his strategy is, and maybe build on that, maybe even become better than him. Okay, so maybe he has a certain comfort zone, a comfort level that he's not able to go above, and you will be able to, because you have the psychological mindset that it takes to become successful. So this is an idea that I just had, and I'd like to start as soon as possible. So as soon as you can, let us know, fund your account, and let us know what your investor password is, your read-only password, so that we can access your account without being able to trade, just to see and monitor your improvement. Okay, so it's like coaching, but in COVID-19 age. So we won't be able to be in the same room, but at least we'll be in the same virtual room. Okay, so I'll end this webinar here. I'm sorry I took much more of your time than I was supposed to. Next webinar, next Wednesday, it's episode 8, best Forex indicators. We will see the simple moving averages. We missed it today. As I told you, it's going to be, we can go on and on and on about psychology and the right mindset, but we don't, unfortunately, have a lot of time. And I know I talk too much. So we will just best Forex indicators, simple moving averages, support and resistance secrets, breakout, breakdowns, overbought, oversold. Next time, guys. Have a nice day. If you have any questions, feel free to ask them now. All right. Okay. Thank you so much. Have a nice day, everyone, and see you next Wednesday.